gearing. It hasn't been talked about as much as maybe it was a decade or so ago. What's the role for gearing in growth? If you've got a long time horizon, is it a tool for people to take advantage of?
Oh, absolutely. So gearing was popular, particularly around the time of the GFC, unfortunately. And if we look at, maybe some people have had some pretty unfortunate experiences through using really excessive levels of gearing through that period. They have a lot of very bullish expectations as to what the market was going to deliver. We actually have developed a range of ETFs that we launched just within the last year, which adopt a very moderate level of gearing. These are called the Wealth Builder ETFs. So they have an LVR between 30 and 40%, which is relatively low in terms of geared investments. We think that using a little bit of gearing actually is going to be a really attractive way to compound wealth over the long term. It means that you're going to get a lot less volatility in your investment portfolio, and it means in periods when gearing is not going to work, like a sharp drawdown, your capital is going to be, there's going to be a greater degree of capital preservation. And when you're using gearing, I think one of the critical factors is minimizing the cost of that gearing, because for a geared portfolio to outperform the ungeared alternative, you really need that portfolio to deliver a return greater than the interest and other costs associated with gearing. So these wealth builder funds, there's a variable rate of interest which is applied to the loan, and that interest rate is currently below 5%, which is incredibly low when you're thinking about the hurdle rate that your portfolio might need to deliver. So GHHF is our all-world, all-growth exposure. That's diversified global and Australian equities. If you're someone starting out in your investment journey, or even if you're a bit later on, you want to take advantage of the market's compounding power, you want to do it as low cost as possible. We think adopting a smaller level of leverage is really going to help you in periods when markets are performing well as when they're perhaps not so jubilant.